Hello and welcome to another update video about Ethereum. In this video I only focus here on the shorter term because we are still moving in this Elliott Wave triangle. It's doing nothing that would be outside the scope of this Elliott Wave triangle that we discussed yesterday. So everything that we talked about in the context is still valid, that we are, in my opinion, in this wave 2 correction, A wave, B wave, C wave. The B wave could unfold as a triangle, A, B, C, D, E, or it could unfold as a higher B wave, but I currently see no evidence for that. So that's what the red resistance zone is for. Yeah, for example, it could be an A, B, C. Absolutely possible, but no way of saying which one is going to turn out. Be aware of the important resistance and support levels that we've been calling out and that we are talking about. But at the moment, I'm leaning towards this Elliott Wave triangle count, which so far was the right decision to do on Friday already, and it's followed that nicely. So there's no change to the overall scenario here. So overall, the idea is that we bottomed here in a so-called A wave of a correction on the 25th of April. We put this first wave of a triangle in place in an ABC. That was the A wave of a triangle. A triangle has 5 subwaves, A, B, C, D, E. We then came down in a B wave. Showed you yesterday this WXY structure of a C wave. Highlighted to you that D wave down would be my preferred choice. It's happened now. Now we just need to see, okay, is this a D wave or are we actually already breaking down in the C wave? I mean, both are part of the same scenario essentially. It's just a different way of getting there. Lower in wave C, yeah. And bear in mind that overall these are the key support levels, 1754, 1663 and 1533. Only below 1533, I would get more concerned about new bear market lows. Until then, I'm counting this primarily as a wave 2, which would ideally result in a third wave rally to the upside. What was the target for the D wave? I actually can't remember if I gave it to you in the video yesterday. I definitely did in the Bitcoin video, but we looked at the 61.8 extension. I think I remember I gave you a target. So we talked about the 61.8 extension of the B wave, and that is here 1833. That was reached, as you can see. They are never super reliable targets, these Elliott Wave extension targets in triangles, but they are certainly levels to watch, good for orientation. And if it's going to do an E wave, which is the last wave of the triangle before breaking out, it would probably turn around now or very, very soon, because a break below the B wave low, which is at 1790, would confirm the triangle breaks to the downside. So we are in this range. The range is defined between 1790 and 1963. A break below 1790 would make the triangle break to the downside, which would be the indicated direction. If it breaks above 1963, it would be a breakout to the upside. It would not be in line with the indicated direction based on this triangle count, but it would not invalidate the larger wave 2 yet at least, and it would just be the higher B wave. But for now, I'm leaning towards that we go down and see directly, either now or after another E wave to the upside. We'll see. You know, this is, as I said to you, if you take these smaller degree counts for certain, then you need to listen to my previous videos where I explained, you know, there's a lot of uncertainty, especially in a B wave. You know, we do this sort of more for education and fun, just a tracking here of the subwaves, because not much is going on the higher time frame. They do allow you to understand the key breakout points and the key invalidation points. You can use that for trading. Yesterday, for just to give an example, we talked about in the member live stream, it was related to Bitcoin, but of course applies for Ethereum as well, to use this information, because someone asked for a short trade setup, and I highlighted, yeah, I mean, here in this range is of course a possible or at least a reasonable short trade setup, because the invalidation point is of course the A wave high, so we were very close, yeah, and a stop above that, you know, could have been a good stop for a short trade. Now, I can't ever give you recommendations about trades really and what you should do, because this is financial advice, comes too close to really personal advice. But it certainly was a reasonable short trade setup. And this is how you can use that information for trading, right? Because as you're close to these invalidation points, these inflection points, you know, they can be traded, of course. But that's how you normally do it with Elliott Wave technical analysis. Just be aware that B waves are extremely difficult. I do talk about that basically in every video in which we have a B wave, because a lot of people don't really know that or don't have that in-depth understanding of Elliott Wave, you need to understand that some waves are more reliable than others. Some you want to avoid at all. Some people don't trade a B wave at all. Trading a triangle is also not going to work for most people. So the idea is that after a triangle, at some point we get an impulse, and that will be the easier path for many people, because triangles can always extend out. I mean, even if I say, as per this count, ideally we get another E wave up, and I'm actually surprised it worked out so nicely so far, okay? But if we get an E wave up, there's nothing stopping this triangle to do this, yeah, to just extend out a little bit further, and then we just have to move the waves across. That's just how it works in a triangle. Until it is broken out, it can always extend. The right mindset in a triangle is it's going to extend until we have an indication it's breaking, okay? But yeah, so far no change, and it's just following the count for now. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.